Wednesday, July 27th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how China is ramping up its purchases of physical gold. Before we start though, we're going to look at a few other things, and I'm going to announce a few things as well. First of all, just wanted to let you know, yesterday I interviewed Andy Schectman of Miles Franklin. Miles Franklin is one of the few registered dealers with the U.S. Mint. And Andy Schectman is the man who dealt with the Texas billionaire. So he talked about what went on and what will probably go on in the future. The fact that this lady wants to buy maybe even up to $1 billion worth of gold and silver. So I'm going to put it up in the cards if you haven't watched it yet. I posted it last night and in the description. The other thing I wanted to mention, yesterday after I did my first video, the IMF came out and slashed global growth forecast for 2022. So the IMF, the FT, reports here, IMF slashes global growth forecast and raises inflation projections. So more rising prices and slower growth. That's stagflation in my book. And it says risks to economic outlook are overwhelmingly tilted to the downside, Fund warns. One thing I would say about the IMF is that they're usually a step behind. So I would say if they're warning like this, it's because things are even worse. And another topic that I wanted to cover briefly is to do with the leadership contest here in the UK for the Conservative Party, which will result, of course, in a new prime minister, either Sunak or Truss. There's a lot of debate about taxation, and I think it's gone beyond the point where this economy can recover no matter what we do. And why do I say that? Well, because government has gotten so big that it's such an important part of the economy that no matter what we do, as I said, it's going to be very tough. And unless we really, unless there's kind of a revolution really in thinking, not a bloody revolution, but a revolution in thinking that moves towards a world, a mindset where people want to be self-sufficient, where people don't want to live off the government, things can't improve. And with that, I'm going to recommend a really good book that I've recommended many times in the past. But as we get more and more new subscribers and new viewers, I think it's important for me to keep refreshing it. And this is probably one of the most important books that if I had to choose a few books to save, this would be one of them. And it's called The Law by Frederick Bastiat. And I'm going to put a link to it in the description below, a link to a free PDF. You might want to buy it as well. I recommend you go to the Mises.org website. They sell all these kinds of libertarian free market books, and help the Mises Institute if you're going to buy it, I would say. So why is this so important? And it applies to every country in the world. Frederick Bastiat, he was a French statesman, philosopher, writer back in the first half of the 19th century. So it says the classic blueprint for a just society. So what's this book about? I'll just quickly go through it. It is impossible to introduce into society a greater change and a greater evil than this. the conversion of the law into an instrument of plunder. France of 1850 was in political turmoil. In the aftermath of the Revolution of 1848, the tide of socialism was sweeping the nation. One man stood alone against the tide. The precocious son of a merchant, Frederick Bastiat devoured the writings of free trade economists such as Adam Smith and Jean-Baptiste Say. Rejecting the popular notions of his day, Bastiat began to speak and write against ideas he believed were undermining natural harmonies of interest among men. First as an orator and essayist, later as a member of the Legislative Assembly, he became known for withering logic and devastating wit. He also became isolated politically. The struggle between left and right was for power and plunder. Yet Bastiat believed that the only purpose of government was to guarantee individual rights and freedom. And this is a really great quote that he made. And he said, "The state," he declared in perhaps his most memorable epigram, "is the great fiction by which everyone tries to live at the expense of everyone else." So I highly recommend it. It's not a long book or a big book. Really easy to read. Basically, the main point of this book is that government is there not to take your property away and redistribute it to other people. It's there to protect it, and and that's the problem that we've got today. And I mean, can you imagine if every child in every country was given this book to read in school? I think the world would be a lot better. Would be a lot better place. So yeah, that's all I have to say about the debate that we're having here in the UK. So now back to China. We have known, of course, for years that China, Russia, and a lot of the emerging market countries, the Eastern countries, India, they've all been accumulating gold while the West has been hoarding gold. And is it any wonder that economic and political power is moving more and more towards the East, and the United States and Europe are losing more and more of those both those powers, right? It's not surprising, and it continues, it looks like. So recently there's been some news out of Hong Kong. And yeah, I've got here businesstimes.com. It's from Monday, so a couple of days ago. China's net gold imports via Hong Kong soar in June. So let's just go quickly through it. It's a short article here. China's net gold imports via Hong Kong in June jumped by about 390% from the previous month. Hong Kong's Census and Statistics Department data showed on Monday, July 25th. Net imports stood at 40.563 tons in June compared to 8.28 tons in May. The data showed total gold imports via Hong Kong jumped nearly 208% to 43.587 tons. China is the world's top gold consumer. And China is also the world's biggest gold producer, as you can see here by data from 2020. So yes, they know what gold is, and they're accumulating it, while we in the West are trying to really discourage people from actually accumulating it, except for channels like mine and others. And someone sent me this story here as well, that India is looking to develop its own bullion market. I haven't really looked too much into it, and I need to, of course, but off the top of my head, I would say that they want to be less reliant on the LBMA, which is quite interesting. Maybe they know something we don't, or maybe they want to, move away from the Western New York, London controlled bullion market. So that's quite interesting as well, seeing that India is part of the BRICS. India, of course, is a big consumer of gold as well. It's a strange thing to say, consuming gold, but anyway. Today, of course, before we go into look at the markets, we've got the FOMC decision. It comes out at 7 o'clock. 7 o'clock London time, or 2 p.m. New York time. And then we have a press conference, of course, I think half an hour later. I think they'll raise by 75 basis points. I think by now, even though they're not really publicizing it, and especially with what the IMF said yesterday, the Fed must know that things are not great for the economy. So I think they will do 75 instead of 1. They could surprise, of course. But more importantly, it will be key that we listen to what the comments that come out right after the decision, what they say about the economy and going forward, and also listen to Jay Powell, what he says during the press conference. Just before we move onto the markets, just show you this chart here. Someone put it on Twitter, and and it's a Bloomberg terminal, which is good. So as you can see here, the 2s, 10s, the spread between the 2-year yield and the 10-year yield, it's the most negative it's been for almost 20 years. It's more inverted than it was back in the end of 06, beginning of 07, just before we had the great financial crisis. So it's getting very interesting. And so it's, let's see what time it is, 10 past 8 a.m. London time. So we've got spot gold at 1721. It's up about $4. We're right near the highs here. The high's been 22. The low has been 13.5. Silver's up 2.5 cents, 1864. High's been 74 and the low 54. If you want to know the state of the precious metals market, especially physical market, listen to my interview with Andy Sheckman. I highly recommend it. The Dow future is up 0.5%. Or 150 points. The NASDAQ is up 175 or 1.5%. S&P is up just under 1% or 35 points. The FTSE is up 21 points at 73.28. Eurostoxx 50 is up 12. To the currencies, sterling is up 1/8%, 120.45. The euro is up 0.2. At 101.38. The dollar is unchanged versus the yen, 136.92. The dollar is unchanged versus the Swissy, 96.24. And also unchanged versus the yuan at 6.76. And the dollar is continuing to rise versus the ruble. Actually, we are back up to 60. So the dollar strengthened a little bit against the ruble. It's up 2% overnight. To the other currencies, Aussie dollar is down 1/8 at 69.30. The dollar is down about 0.2, versus the Canadian dollar, 128.63. And the Kiwi dollar is unchanged at 62.25. To the general commodities, we got WTI crude up 0.75% at 95.09. Brent is trading at $100 exactly. It's up 0.5% as well. High-grade copper is up 0.5% at 3.40. So let's look at natural gas right now. We're going to look at the U.S. natural gas and the European. Of course, Russia announced that it's going to cut even more the supply of natural gas to Europe. it's not going to be a pretty winter for consumers, for the general public, and even for the German industry, for the economy everywhere around Europe. So right now, U.S. nat gas is unchanged. It's just below 9. It's at 8.79. It's moving towards near all-time highs. There's still a lot of room there, but more interestingly, the Dutch TTF natural gas contract, which is the European natural gas, that's traded to an all-time high above 200. And I was speaking about that the other day, and I said I think we're going to break that 200 level. And I think we got up to 218. So things are not great on that front. To finish off, we're going to look at the bond market. So the 10-year yield is up 2 basis points at 280. The 2 years at 305. So we've got a 25 basis point inversion. Looks like for now, the European bond markets are stabilizing. Of course, the ECB has come out with this TPI policy saying they're going to print as much as they need to keep Italian government bonds from collapsing, and others as well in the periphery. And they might very well do so. You might have a scenario where prices are rising 10, 15, 20%, and bond yields are like 1 or 2. And you might think, my bond holdings are doing well. But in terms of purchasing power, they're losing a lot of purchasing power. And the central banks, all they're doing is fooling people by printing and buying these things with currency that becomes more worthless and more worthless as time goes by. So what I'm trying to say here is that you could have high inflation or even a hyperinflation, and the central banks keep buying bonds. But if the currency in which these bonds are denominated is worth nothing, what's the point? So anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great rest of the day. Take care. Bye.